The SEC must lose. It must lose against Uniswap the same way it lost against Ripple, the same way it lost in key sections of its suit against Coinbase. And in this botched attempt to fight crypto, it will actually achieve the opposite and provide the clarity that the industry needs to move forward. Near, one account, every blockchain, made possible with chain abstraction. Solana's largest community conference is almost sold out. Keep watching to learn more. Hi everyone, welcome to Crypto with Cami, where we go through all the main headlines in crypto and DeFi in the past week in 30 minutes or less. This is the show for the week starting April 8th. So a couple of really big news this week. The SEC is going after Uniswap and Uniswap is ready to fight. EigenLayer launched additional functionality on Mainnet. The Bitcoin ecosystem is on fire. And also, the Defiant launched a Memecoin as an experiment. Stick around till the end and we'll tell you how that's going. So let's start with Uniswap. This week we learned that the SEC sent Uniswap a Wells notice on Wednesday. A Wells notice indicates that the SEC staff has decided to bring on enforcement action against a person and firm and provides them with an opportunity to provide additional information and written statements. So basically, the Uniswap Labs company has received this warning from the SEC, which signals that the SEC has started enforcement action against Uniswap Labs, the company that's behind the Uniswap protocol, which of course is the biggest decentralized exchange. It's unclear what the SEC is charging Uniswap Labs with, but the SEC has previously sued centralized crypto exchanges like Coinbase and Binance, saying that they are operating as an exchange, broker, and clearinghouse for securities without the necessary approvals from the agency. So probably it'll be something along those lines for which it's suing Uniswap. Hayden Adams, Uniswap founder, said on Twitter that he's not surprised, just annoyed and disappointed and ready to fight. Uniswap Labs argued in a blog post that they're confident they're not breaking any securities laws. The SEC has jurisdiction over securities, such as assets that are classified as investment contracts, but it does not have oversight over secondary market transactions in assets. And that's exactly what the Uniswap protocol does. So Uniswap is also saying that that most assets traded on Uniswap aren't even securities. Even if the SEC loves to say that most tokens are securities, most of the assets traded on Uniswap are stablecoins, Bitcoin, and ETH, which have been labeled commodities, and tokens that are governance tokens, meme coins, and so on. The SEC hasn't even provided clear guidance on what would or would not make them securities. Uniswap is also arguing that the Uni token is not a securities offering because it does not meet the Howey test, which says a security is an investment of money in a common enterprise with the expectation of profits dependent solely on the efforts of others. Uniswap says there is no contract or promise between Uniswap Labs and the token's 300,000 plus holders. There's no common enterprise, and the value of the token is not dependent solely on Uniswap Labs' efforts. That, to me, of Uniswap's arguments is the weakest. Uniswap protocol does heavily depend on the development of Uniswap Labs. And as recent proposals suggest, holders are expecting and wanting to receive gains that come from the use of the protocol via the fee switch. At the same time, though, Uniswap, the protocol doesn't have a multi-sig. The smart contracts are not upgradable. Each version of the protocol that's launched can't be altered and works as programmed via the decentralized computer that is Ethereum. Anyone can access the Uniswap protocol. The team itself can't interfere with how it works, even if they did design and build it. So, that would be an argument against calling Uni a security. In any case, the SEC coming after Uniswap might be another sign of what could be, what I think, is the biggest economic blunder of the United States this century. Think about it. The tech industry accounts for 1.9 trillion of US value-added GDP. That's more than 10% of the national economy and adds 12.1 million jobs. That's because the US has spearheaded development of the web. It's led the internet age. The companies at the core of this revolution are based here. Facebook, Amazon, Google, Microsoft, Apple, they're all US-based companies. Crypto has the potential to make a similar impact. It's better infrastructure for finance, and it's already chipping away at the old financial rails, and has the potential to change the model of the web itself, decentralizing power away from the very tech giants I just named. Uniswap is probably one of the best examples of this technology. It's groundbreaking tech. It's hard to overestimate the impact that Uniswap has had on decentralized finance. Before Uniswap, decentralized exchanges were almost impossible to use, or at least extremely hard. Uniswap made DEX trading seamless for the first time, innovating with automated market maker model so that all tokens can have liquidity. They also made retroactively rewarding communities the norm with its airdrop. They're building a properly decentralized protocol with token-based governance. The company behind it, Uniswap Labs, is based right here at the heart of New York in a sign that they don't need to hide from anyone. So the US is leading development in crypto right now. Much of the brainpower, innovation, and investing is happening in the US, and that's even as there's an adversarial regulatory environment. But for the US to retain its lead and in that way get the jobs, economic activity that comes from this growing industry, it can't keep fighting it. Founders are already leaving. Those just starting out in crypto are looking to Asia, and even Europe is friendlier than the US for them to start their companies. The United States is fumbling the bag. And I think the answer is simple. It's because politicians and lawmakers are bought by TradFi and big tech. And they are increasingly seeing crypto as competition. This is no conspiracy. It's the simple and actual truth. Last year, there was a record $4.26 billion spent on lobbying. Companies lobby lawmakers and politicians. They donate to their campaigns, and in exchange, they expect they'll get policies that benefit their business. Otherwise, how do you explain the SEC going directly against its mandate? According to the SEC's website, the SEC's mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. What is more fair, orderly, and efficient than markets enabled by DEXs? Anyone can trade and market make based on the same hard-coded, predictable rules, with trades recorded in a transparent, immutable ledger. And how is fighting a better, more fair, and transparent financial infrastructure protecting investors? It makes no sense. And again, it's because the incentives are not aligned between investors, individuals, and users, and the SEC. The SEC must lose. It must lose against Uniswap the same way it lost against Ripple, the same way it lost in key sections of its suit against Coinbase. And in this botched attempt to fight crypto, it will actually achieve the opposite and provide the clarity that the industry needs to move forward. So in a way, all these lawsuits, all these fights against Coinbase, against Uniswap, and the legit crypto projects, because obviously, lawmakers, regulators should go after the scams, but these are actual legit companies, protocols that they're fighting. In this fight against legit crypto, they will end up paving the way for the industry to grow in the United States. That's what I really believe. I really do think this will end up being bullish. Now on to other headlines. After successful testing on different testnets, EigenLayer is now live with new features and functionality. So up until this week, users could only deposit liquid staking tokens into the protocol or set up and configure an eigenpod to natively restake ETH. But now restakers can delegate their entire stake to one of the operators who has opted in to secure an actively validated service. Reminder that these AVSs are those apps and protocols building on top of EigenLayer and using restaked ETH to secure their networks. So operators who wish to run AVSs can register as a node operator on EigenLayer and opt in to run AVSs such as EigenDA. The initial set of active operators for EigenDA is limited to the top 200 operators based on delegated stake, with plans to expand this in the future. So in the first 24 hours of this new functionality being live on mainnet, EigenLayer brought in 500 million in delegated stake and 28 operators. Operators include some big names such as staking infrastructure provider Figment, the Coinbase development platform, Google Cloud, and Blockdaemon, among others. Operators received more than 137,000 ETH, or nearly $500 million in delegated stake from 4,000 restakers. EigenLayer TVL also reached an all-time high on the same day that it launched this new functionality on mainnet, surging to almost 14 billion on Tuesday. This is notable. EigenLayer is finally releasing all its main functionality. This is a protocol that has sparked an entirely new category within Ethereum, enabling projects to leverage Ethereum staked ETH to bootstrap their own security and opening new ways for ETH holders to earn yield and to put their ETH to work. Again, this has spawned an entire industry of restaking, liquid restaking protocols and assets. And EigenLayer is at the very base of this. So in the coming months, we'll see if it can live up to the hype. And, this step of bringing delegated stake to operators and the ability of operators to choose their AVSs, those are key pieces to see EigenLayer in full action. Okay, next up, we have a few Bitcoin-related news. Bitcoin ordinals are dominating NFTs. So during the depth of the 2022-23 NFT bear market, few would have believed that the sector's resurgence would be fueled by Bitcoin. But since the advent of ordinals early last year, the market for digital collectibles in the world's most valuable blockchain, that's Bitcoin, has grown steadily and is now responsible for roughly 3/4 of total NFT marketplace revenue. Also, Bitcoin-based collections are now 3 of the top 10 NFT collections. And this is pretty crazy. Runestones recently surpassed Bored Apes to take second place of the top 10 NFT collections. It's crazy to think that Bitcoin is leading NFT collections, NFT trading, and marketplace revenue, when not so long ago, you couldn't even issue an NFT on this network. Also, not long ago, liquid staking and Bitcoin definitely didn't mix, but that's also changing. So there's projects doing just that, with Nomic DAO Foundation and Babylon Bitcoin joined to introduce STBTC, so Bitcoin liquid staking token. Users can now exchange Bitcoin for NBTC by using Nomic's Bitcoin Reserve. And then through Nomic's staking pool, users can lock their NBTC to mint an equivalent amount of staked Bitcoin tokens, which, like NBTC, can be used throughout the Cosmos ecosystem. So the way that they are introducing staked Bitcoin yield is by using the Cosmos proof of stake chain. So it's not like people are staking, obviously, Bitcoin on Bitcoin itself, but using Cosmos proof of stake to stake Bitcoin and get yield on Bitcoin. There's news on the spot ETH ETF front, on April 8th, Nain Geraci, co-founder of the ETF Institute, tweeted that the SEC had held meetings with several ETH ETF fund applicants regarding their filings. But a report from Barron's said that the meetings were predominantly one-sided, with the SEC failing to give these ETF prospective issuers any critical feedback needed to finalize their products. So the odds that the spot ETH ETF will be approved in May continue declining over time. We'll go over the next headlines quickly. The Open Network Ton, a layer 1 blockchain linked to Telegram, has rocketed into the top 10 digital assets by market cap, overtaking Cardano. In airdrop news, Solana's leading NFT platform Tensor airdropped $250 million worth of TNSR tokens. That's 12.5% of the total supply. They airdropped these tokens to early users, with the project currently trading at $1.9 billion in fully diluted valuation. Also, after months in the doldrums, SocialFi platform FriendTech saw some light in the horizon, with 7.4 million of inflows and more than 40,000 transactions on April 8th, both the highest since October 2023. And this is on the expectation that the platform's V2 iteration, expected to live later this month, will have a potential airdrop. The TVL on the platform has also risen by a third to 40 million. Fundraising news, crypto VCs are still vying to back the leading layer 1 chain. Monad Labs closed a whopping $225 million round led by Paradigm. They are trying to innovate on the EVM model, so trying to make the Ethereum virtual machine more performant. Web3 projects continue to embrace AI. This is super interesting. Network Masa, the project is offering tokenized rewards to users who contribute to train AI models, and they launched on mainnet this week. There was a bit of drama this week as well. Edgar Pavlovsky, the founder and now former CEO of MarginFi, that's a Solana-based protocol for lending and borrowing, has resigned, and that precipitated heavy outflows from the protocol. And more Sushi drama from our Sushi correspondent, Samuel Haig. So this long-running governance saga appears to be coming to a head. The controversial core operations team is hastily moving forward to push through a governance proposal that would transfer the project's treasury into the hands of a centralized Sushi Labs team. Really recommend heading to this story to read about this governance proposal. We got comments from all sides, and so we got really deep into what this controversy is all about. Okay, now finally, I want to talk briefly about our Memecoin saga. So this has been pretty insane. This just happened yesterday, Thursday. So this week, our freelance writer Squiffs pitched to cover Pump.fun. This is a platform that lets people launch meme coins on Solana and Base very easily with no code, very little money put up front, like less than $10 to launch a meme coin. And you only do it in a couple of clicks. It really took him, like a couple of minutes to launch it. We were discussing this story in our Discord, and I told Squiz, let's test the platform out for the story, see how the experience is, so you can better write about it. So how this works is that a new token is launched along a bonding curve on the Pump Fund platform that anyone can buy and sell into. And if the token reaches a total market cap of around $70,000, the liquidity from the bonding curve will be deposited into Radium and burned. And when that happens, then the token is kind of out in the wild to be traded. We never ever expected that the token would make it out of Pump Fund. Like, we never advertised it. We never announced we were launching anything. We were just testing the platform for our story. So why would anyone buy it? I don't know. But it immediately shot up to $250,000 in market cap with about 1.5 million of volume. So I think it's bots that, just saw this token pop up and went for it. And then, so it started to rally for the first few minutes, but then it started to dump and people started to get mad. So with this token, this new experimental, meme coin in our hands, we decided that now that the token was out in the wild, and as we at the Defiant, we had no plans for it, we thought, it's fair to turn this over to the community, meaning we as a Defiant will have no control over it. We never announced we were launching it. We never made any promises around it, but nonetheless, people bought it anyways, as is the nature of meme coins. You buy hoping it goes up, it's kind of like a lottery. And so, we decided, since the token was already out and we had no plans for it, then it would be fair to turn this over to the community, the people who were holders of the token. Squifs, who launched the token, got 0.6% of the 1 billion of supply. That's the standard pump.fund launch process. I personally bought 4 million of Ant when it launched to distribute to the Defiant team. And other team members have also bought Ant tokens out in the open market, just like anyone else could have. The Defiant had no allocation. So the entire supply of the token is already out and trading in the secondary market. And just like a brief backstory on what the token, the meme of the token, again, we were discussing this story on the Telegram. Squiff said, okay, I'll launch a token to see what the platform is like. What should it be called? I remember that Vitalik in an interview had said, the Defiant often uses the Pepe Frog on our t-shirts and swag and stuff. And so Alp, the video producer of the Defiant, gave Vitalik a Defiant t-shirt with Pepe Frogs on it. And so Vitalik said, if you're the Defiant, how come you have frogs? And so I thought that would be, a cool moment to memify and turn into this experimental coin. And so that's how the Defiant token was born. And I really like this concept of ants being tiny and kind of weak individually, but together they're very strong and they're defiant. So that's the tagline of the token. Tiny alone, defiant together, defy ants. And that's it. And that's how the token was born, with no other discussion or thought behind it. So again, once the token made it out of Pump Fund, people were buying it, selling it, trading it, and demanding kind of that the dev do something, that the people who launched it do something about it, even though we had never promised we would. We created a Telegram chat to bring the community together. A Twitter. I bought a domain for it, defiantstogether.com. Very happy that we got the .com domain. And so the plan is that whoever emerges organically as a leader of this community will get all the admin of all these assets, of the Twitter, of the Telegram, and the domain, to make a website or whatever they decide to do with it. And, we'll turn over all of this to the group. So that's it. That's how we've somehow got into this meme coin frenzy. It's been a roller coaster to really experience it firsthand, seeing the price rise and fall, the euphoric messages on Telegram, the FUD, the discussions about what the utility should be, or if there should be utility at all. I'm like I've said before, I'm not an investor. I'm not a trader. I don't hold any meme coins. So it's kind of the first time seeing all this, and I can see why people get addicted to it. It's pretty exhilarating. It's really fun, but it's now in the hands of holders. Some people have been very positive, and they propose different use cases. They make memes. They have fun with it. Others are very negative and complain that the price is down. That like do something, like where's the roadmap, which I don't get. Like, it was an experiment from the start. There was, we never said we would do anything with it. They bought a meme coin, expecting, just like throwing the dice, seeing if it would go up or not. And it's crazy to me that after doing that, people, demand that something happen, if you are really rolling the dice on these things. But in any case, I think it's pretty cool that this is actually now a community-led project. I'll be excited to see what happens. Again, I think, the narrative behind it is pretty cool. Like, that's why I like holding it. These kind of ants banding together, doing something awesome, defying odds. So yeah, maybe this community runs with it and something cool and valuable comes out of it. Maybe it doesn't. But anyways, it has been very fascinating to experience meme coin frenzy, firsthand. So that's it. Pretty crazy week, both in crypto and at the Defiant with this new meme coin. Hope you enjoyed this episode. Comment, like, subscribe, share, and hope to see you all next week.